To the loan officer sales training with the mortgage calculator. Today we're going to be talking about beating competitors' rates. We'll wait just a moment here to go live on all the different platforms. Remember, we do this at 12 p.m. Eastern every weekday where we go through more of the front end of the mortgages and sales type stuff here. So we'll get started here in just a moment. Thank you everybody for tuning in. Hope everybody had a great holiday weekend and is ready to get back to it, get on the phone, make those calls. And today we'll be talking about how to make sure we beat the competitors' rates when we do talk to the clients. I see some comments already coming in there. Go ahead and drop comments there in the chat as you tune in. You can also drop any questions you have as we go through the training here today. So with that being said, we will go ahead and get it started. Welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and this is the Loan Officer Sales Training. Today's topic is how to beat competitors' rates. So I got a couple slides here that we're going to go through. Obviously, very important to be able to beat the rates of the competitors, especially now when the rates are dropping. It's a pretty fluid marketplace, so we need to make sure that we have the tools on our end to be able to beat the competitors' rates and weed out what is and is not something that is comparable to what we can do, right? So we'll go ahead and get into it here. The first step on beating competitors' rates is that we need to get a locked loan estimate, right? There are no rates to beat until the client can show us a locked loan estimate. So that's always the first step, right? And that's where a lot of loan officers tend to kind of get stuck and just try to go by what the client is telling them. Oh, my client says they have a better rate at this place or that they have this. Remember, we can only go by a locked loan estimate. Anything other than a locked loan estimate essentially means nothing, right? And so the first step is always to get the locked loan estimate. Now, we also need some information from the customer to go with that loan estimate, right? So we're going to talk about reviewing the loan estimate here on the next slide. But first, we need to get those extra details that aren't actually on the loan estimate. Those are things like the credit score that they based that pricing on, right? That's a big one, and it's not going to be on the loan estimate. So we need to make sure we ask the client, and a lot of the times the client doesn't even know what that rate, or excuse me, what that other loan officer quoted them on. A lot of times the loan officer will just send them a quote at 760 credit score and not even think about what credit score the client actually has, right? So we need to find out what credit score it's based on, and that's not going to be on the LE. So we need to ask the client that and do a thorough interview. That's why we're going to thoroughly interview the client, not only when we're first talking to them, but especially when they're giving us loan estimates and talking about other people having better pricing. We need to make sure we really interview the client. Another thing we need to interview the client about and make sure that what loan program is this based on, right? Because we have to match these apples to apples. So when we get this locked loan estimate, we need to go through what credit score is it based on? What loan program is it based on? Are there any special requirements for that loan program? There's loan programs out there, for example, that have income restrictions, right? You have to be below a certain income level, the median income in that area, right? Those type of programs may not work for your client, but the other loan officer may have quoted them on that type of program. So that's a very important thing to know, because if they're comparing your quote to your competitor's quote, and your competitor quoted them on a special program that has lower rates because it's for people with lower income, then that's not going to work unless the client actually has that lower income, right? So we have to be able to figure these things out to be able to match our rates apples to apples and figure out if they really are beating us or not. 9 times out of 10, they're not going to be beating us at all once you actually get the information and compare it apples to apples. Now, another thing is occupancy. We need to know what occupancy this is being quoted on. Did they quote them on a primary residence or a second home when it's an investment property, right? So we're definitely going to need the occupancy to make sure that we're quoting the same thing, as well as the borrowers. Who are the borrowers on the loan? Are you going to be occupying the property by yourself? Are you going to be having a co-borrow or a non-borrowing spouse? These are all things that can affect what we're actually quoting them on, right? Going back to the special requirements in the income restrictions, if they have their spouse on the loan and they're counting that income, then we really need to look at if there's any income restrictions for that type of loan, right? So all of these things play a part. And again, this slide here is showing what is not going to be on the loan estimate, meaning that we have to thoroughly interview the client to get this information in order for us to be able to pull this up and compare it apples to apples. Now, here on the next slide, we're going to be talking about actually analyzing the loan estimate itself and looking at the info on the loan estimate. First of all, term. What are the actual terms? What is the amort type? Are they quoting them on an ARM, comparing you quoting them on an actual 30-year amortization, right? So it really depends on the terms, the amort type. These are important things that we need to look at the LTV and see if they quoted them on the same thing that we're quoting them on, right? It's going to be a big difference when you're quoting them on a 30-year fixed mortgage and the other person quoted them on an ARM, right? Of course, the pricing is going to be different. We're not comparing it apples to apples. Also, the LTV is going to be pretty easy to look at, but next thing here too, the property value, right? Did that person quote them with a property value that's way higher than yours? So essentially the LTV is lower than yours for what they need to get. And so now all of a sudden it's, a much cheaper loan on the quote that they're quoting because, they exaggerated the property value and it may not be that valuable, right? Another thing here is mortgage insurance. Right? Did they quote mortgage insurance included? Did they explain to them that they need mortgage insurance? These are the type of things where you can really use this to your advantage when you're talking to your client, because if you're talking to them about mortgage insurance, if it's a quote that would need mortgage insurance and their loan officer hasn't spoken to them about that, that's a big chance for you to come in and be the expert loan consultant and make your client understand, hey, I'm informing you on all of the costs of this loan, right? I'm informing you on how this is actually going to work. That other person sent you a quote and didn't tell you anything about mortgage insurance or that you're going to need it. So if, ask your client, did they talk to you about mortgage insurance? Did they tell you it's going to be required because this quote is at 90% LTV for a conventional loan, right? And if they didn't, that is your chance to come in as the loan consultant and say, hey, I'm going to talk to you about everything. I'm very straightforward, very upfront. We're going to talk about everything here. If that person hasn't talked to you about mortgage insurance, it's going to play a big part of this loan and the cost of this loan. And so that's your chance to swoop in and, again, be the actual consultant there. Another thing to consider is the address of the property and the area. Did they actually quote them based on the area? We're talking about things that come into play, such as the conforming loan limits, right? If they didn't actually put the address and actually have it in the right county, they don't know if it's going to be over the conforming loan limits for that area, right? So that is another factor as well, because that's going to seriously affect the pricing if they're over the conforming loan limits for that area, right? So those are things that we're going to look at on the locked loan estimate. But again, this all starts with getting that loan estimate. And I just want to reiterate, so many loan officers have trouble with just getting to that point of understanding. You can't just take your client's word for it. Most of the clients are going to tell you that, they said that they got this rate, or they said that they got this quote, or they may send you a LE that's not locked, right? All these things really mean nothing. We can only try to beat the rates on a locked loan estimate, because if not, we're fighting ghosts, right? We're fighting shadows. We're not actually quoting the same thing as that person is quoting. Now, at the mortgage calculator, we have the price match avenue there, where in your CRM, go to the support directory, choose price match, and you can send it in. 99% of the time, it is not being matched apples to apples. So 99% of the time, it's not even the rates that are the issue. It's the actual loan estimate itself not being properly structured, or just being structured different than the quote that we sent the client, because based on what the client told us, right? So at the mortgage calculator, go to the support directory, click price match. You're going to attach the locked LE from somewhere else. We're going to look at it. If it is apples to apples, and we're going to match that price, right? Because most of you know everybody essentially gets the same pricing, right? So if somebody's sending us a locked LE, right, and it's actually something that we can compare to, they actually did the loan estimate correctly, then we're going to be able to price match that, right? So that's something that's really great about being at the mortgage calculator. But let me go back here in the slide. Remember, it all starts with getting the locked loan estimate and doing this interview with the client. We cannot compare the locked loan estimate if we don't have that locked LE, and if we don't know what credit score it was based on, if we don't know the actual loan program that is, and if it has any special requirements, if we don't know the occupancy, and if we don't know how many borrowers and how they are involved in the transaction. So this slide is great, something you may even want to jot down or take a picture of here, because this is the start. We can't even move forward with seeing if we could beat the rate without having all of this information. So just remember, when you're talking to a client about rates and they tell you anything about the rates, just make sure you do a thorough interview and tell them, send me over the locked loan estimate so that we can see if we can beat it, and then get this information from them as well in the interview. Then once you have all this information along with the locked loan estimate, that's when you can start actually analyzing it. And then again, at the mortgage calculator, you can send it to price match for us to match or beat the price, as long as we're actually looking at a real locked loan estimate, right? So that is very important here, right? That is how we're going to beat our competitors' rates, especially here at the mortgage calculator. Any other companies out there may have their own policies, but here at the mortgage calculator, we really empower our loan officers to be able to get the information from the client so we can properly analyze everything, and then being able to either match it or beat it, because we're very confident in our pricing, and we understand as long as we're comparing it apples to apples that we'll be able to come in and make that client happy. Again, I want to reiterate, doing these things such as talking to them about the special requirements. These are things that the other loan officer probably did not. So let's say that you get the loan program it is, and they're, Home Possible or, something like that. Then at the end of the day, it's going to have special requirements. And if the other loan officer did not speak to them about that, that's, again, another opportunity for you to come in and be the loan consultant and explain to them, hey, this is how this thing works, right? And so I know how it works. The other person may not have spoke to you about this, but I'm going to actually tell you how this all happens. Now, who are they going to work with? The person who's shorting them on information, or the person who's being their loan consultant and explaining to them the process? We've talked about this on plenty of sales training, educating our clients to let them make the proper decision. If we're the one educating them on everything and the other person is just kind of throwing them out stuff and not giving them the full picture, who do you think they're going to work with as the loan officer? They're going to work with the person who's giving them the real information, who's walking them through how everything works, and who's educating them so that they can make the proper decision. Right? So that is what we want to do here at the mortgage calculator. Wherever you are, you want to make sure you're comparing apples to apples always when you are looking at LEs and trying to match or beat rates. So we'll keep it short here today. Definitely jot down this slide here, or take a picture. These are the things you want to make sure that you interview your customer with. So this slide right here shows you exactly what you need. You need that locked loan estimate, and then you need to interview your clients, because remember, the locked loan estimate isn't enough. We have to have this other information, or there's no way that we can see if we're quoting. Maybe they told us their credit is a 680, so we quoted them on a 680 as we should, but the other loan officer just put 760, which a lot of these people do that are throwing out LEs. They're just saying, oh yeah, it was based on a 760 credit score, so it was a real LE, but the person doesn't have anywhere near a 760 credit score, so it's not really a real LE, because it's not actually applicable to the client. So jot this down, take notes here, and make sure that you're always interviewing your clients thoroughly. Make sure that if they say they have better rates, that you get that locked LE. So many people make that mistake of just believing the client and just saying, oh, they said they have a better rate, so I can't get the client, or they give up and say, oh, they're saying they got a better rate, so I'm going to just give up on the client, right? Well, we want to make sure we dig deep, get the proper information, and that we're able to, get the information to our price match team so that they can match the price as long as it's apples to apples. Let's see here. Question is, once the comparisons have been done, how would it work if they have locked? So the locked LE, that, they're not locked into anything, right? They can get a locked LE from anywhere. So, Jackie, it's not like, their loan is locked at the other investor and they can't, or lender, and they can't do anything with us, right? That's not what it is. They're locking the rate, right? And so they'll throw out LEs at the other lenders, and they're not getting a locked LE does not lock the client into anything. They have no obligation to work with that lender just because they got a locked LE, right? They can get locked LEs from all over the place. And so that is why when they get one, we need to use that as our opportunity to, match it or beat it. So I think to answer your question there, the client has no obligation to the other lender just from getting a locked LE. So you don't need to worry about that. You just need to worry about getting that locked LE so that you can actually, compare it apples to apples and beat the pricing. All right, I don't see any other questions, so we'll go ahead and wrap it up. Remember, we do this 12 p.m. Eastern time every weekday where we go through more of the front end of the sales. And then, of course, we have a ton of other trainings at the Mortgage Calculator on the back end. But this is where we do more of the front end of the sales and talking to leads. So we'll be back tomorrow with a new topic. Appreciate everybody tuning in. We'll see you tomorrow, 12 p.m. Eastern time for the next episode